Let's now look at a remeasurement in the context of our company, Precision Industrial, and walk through the calculations that go into a remeasurement in practice. Recall that a few episodes ago, we entered into a vehicle lease for a cargo van in Denver, with an original lease term of 48 months and a renewal option for 12 months. And at lease commencement, we determined we were not reasonably certain to exercise the renewal option. Now let's fast forward 3.5 years to July 1st, 2029. And we've sent notice to the lessor that we will exercise the renewal option. Under paragraph 842.10.35.1, exercising an option previously not reasonably certain triggers a reassessment of the lease term, which in turn triggers a lease remeasurement under 842.10.35.4. So we need to account for this in our workbook and determine the journal entries related to the remeasurement. Before we do that though, let's note a couple of important points. First, recall that for this class of underlying asset, we elected to use the risk-free rate as our incremental borrowing rate. ASC 842.20.35.5 requires us to update the discount rate at the date of remeasurement unless, among other things, the remeasurement is due to a change in the lease term and the original discount rate already reflected the option to renew or terminate the lease. And clearly, the original discount rate we used in our initial measurement did not reflect the option to renew. We simply used the risk-free rate, which would be the same whether the renewal option existed or not. So the conclusion here is that at the lease remeasurement date, we'll need to update our discount rate to comply with ASC 842, which means we'll use the risk-free rate as of the remeasurement date. Second, we originally classified this as an operating lease. Because this remeasurement is due to a change in the lease term, we need to revisit the classification as of the date of remeasurement. It could remain an operating lease, or it could change to a finance lease by the time we complete our remeasurement calculations. So let's now turn to our workbook. The first thing we'll do is add an archived leases section to store the original leases, so we can always reference the pre-remeasurement schedule. Then we'll change the name of our current worksheet to 6.1 to signify that this is the first remeasurement. Then we'll make a copy into our archived section and rename this archived worksheet with the original 6.0 identifier. Then let's give the 6.1 worksheet a different color to highlight that it's a remeasured lease rather than an original calculation. Okay, then here in our original 6.0 lease, we'll do something that may seem a bit questionable, but I promise we have a good reason for it. We will paste over the entire sheet with values and remove all formulas. Essentially, we want to lock everything exactly as it was on the date of remeasurement. Then for the final step on this sheet, we'll highlight the last period in the schedule before remeasurement. Since we're remeasuring on July 1st, 2029, our final relevant calculation is June 30th, 2029. So we'll highlight this row orange. Then back on our 6.1 worksheet, which will become our remeasured lease schedule, we'll do something similar, except instead of copying over the entire sheet with values, we'll do so only for the portion of our schedule that is before the remeasurement date. So from period 0 to period 37, we'll copy and paste all of these formulas as values. And then we'll give all of these a light gray background just to visually make it clear that these are all frozen exactly as they were prior to remeasurement. And then just like our archive schedule, we'll highlight the final period before remeasurement orange. And finally, we'll separate the schedule into pre-remeasurement and post-remeasurement sections. This might be overkill, but I think it makes it visually a bit easier to see what's going on here. Okay, now in our post-remeasurement schedule, we'll start our periods over from 0. Remember, we need to remeasure our lease liability as of the remeasurement date and apply whatever the difference is from the liability immediately prior to remeasurement to the right-of-use asset. So we'll essentially start our schedule over, using the remeasurement date as the effective date. And as for the dates, we'll set the period 0 date to our effective date, and the first reporting period thereafter to the last day of the month of remeasurement. So we'll use end of month, grab the period 0 date, and move forward 0 months. Then, just like on our other schedules, let's give these a different background so we know the formulas are inconsistent with the rest of the column. So speaking of the effective date, let's go update the information on our lease list now. Our identifier will no longer be 6.0, we'll update it to 6.1 as this is the first remeasurement of the lease. Then the measurement trigger will now be remeasurement instead of new lease. The initiation date doesn't change, but our effective date is now July 1st, 2029, and our termination date is now 1 year later because we exercise the 12-month renewal option. Then the remaining term as of remeasurement is 23 months, 6 more in 2029, 12 in 2030, and 5 in 2031. For the discount rate, let's assume that on July 1st, 2029, the risk-free rate has dropped to 3.1%. And we don't yet know the classification of our lease after remeasurement, so we'll clear that out now. Okay, back on our lease worksheet. You'll see things look a bit messy at first because we need to update our identifier. Once we change this to 6.1, the worksheet should start to look a bit cleaner. Now let's start the remeasurement process by reviewing our payments. Remember that in our lease, the original payments were $1,100 at lease commencement, and each year they were increased for the change in the CPI. At this point, 3.5 years later, the payments are likely no longer $1,100. But because no events have triggered a remeasurement up to this point, the payments in our ASC 842 schedule would still be $1,100. As we've discussed, a change in variable payments based on an index or rate alone is not a reason to remeasure. We need to update our variable lease payments based on an index for the current value of the index. In this case, the index is the CPI, so we need to calculate the new payment based on the current CPI. So let's assume that at lease commencement the CPI was 325, and on July 1st, 2029, the most recent CPI value is 340. This is an increase of 4.6%, so the new payment in our schedule will be $1,100 increased by 4.6%, or $1,150.77. And to emphasize this point, it does not matter what our actual current payment is. Maybe when we updated based on the contract at the end of the last lease year, our payment became $1,140, and that's what we're still paying to the lessor. That's irrelevant for this measurement. We instead use the calculated amount of $1,150.77 based on the most recent CPI reading. So let's add that amount here. And these payments will now run through May 31st, 2031 instead of 2030, so we'll update that. And the first payment post-remeasurement won't occur until July 31st, 2029, so we'll update that as well. Now, a residual value guarantee needs to be monitored throughout the lease, and if our estimate of the payment expected under the guarantee changes, that's a triggering event for a remeasurement. And it must also be considered now, since we're remeasuring due to a change in the lease term. Our lease states that if we exercise the renewal option, the residual value guarantee decreases from $27,750 to $23,000. Let's say the same type of analysis we performed at commencement now suggests that the fair market value at May 31st, 2031 is most likely to be $25,000. Based on that estimate, the amount probable to be paid under the residual value guarantee is 0, so we can remove it entirely from our payment schedule. Now, before we turn to the right of use asset, let's go work a bit on our schedule itself. First, we need to link the opening balance of our lease liability not to the ending balance as of June 30th, 2029, but instead to the recalculated opening lease liability. Then there would be no interest calculated on the opening balance, so just as we did on our original schedule, we'll hardcode this to 0. And now we need to add 13 rows to our schedule to ensure it covers the remaining 23-month term. So let's do that now. And now we're getting close, but the reason our liability is not amortizing to 0 by the end of the term is that our total present value calculation here is summing up the entire schedule, but we need to calculate the post-remeasurement liability. So we'll update this total row. Let's change the name to post-remeasurement totals. And we'll change these sum formulas to SUMIFs, so equals SUMIFs based on the date in column G only if that date is greater than or equal to the effective date. Then we'll lock our cells and copy this over for each item. Now to fix our long-term balance formula, we'll add the same criteria check, because right now we're summing up everything pre-remeasurement as well. Then we can lock our cells and copy that down. And that does it for our liability, but clearly we need to look at our right of use asset a bit as well. So recall that for a remeasurement, we must update our lease liability to the new opening balance with the offset recorded to the right of use asset. To calculate our new opening right of use balance as of the remeasurement date, we need to change this section a bit. Instead of using the calculation from lease commencement, we calculate the balance as the amount immediately prior to remeasurement plus the change in the lease liability. So let's update this now. We'll delete the prior information, and the first line will label pre-remeasurement balance, and link it back to the ending balance in the orange row. Next, we need to add the increase in the lease liability. We'll label this change in liability, and calculate it as the new present value of the future payments, less the ending balance in our orange row. And at this point, we can see that our remeasurement entry will be a credit to the lease liability to increase it by $11,739.06 and a debit to the right of use asset for the same amount. After that entry, our lease liability will total $25,675.54, and our right of use asset will total $24,744.29. So at this point, we're nearly finished. The 4 steps we have left are to reanalyze our lease classification, recalculate our lease expense, enter our journal entry for the remeasurement, and update our subsequent accounting journal entry. So let's stop here for now and cover those items in the next episode.